Per usual, everything else channels for educational purposes only, is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts here, and not too easy to find any bearishness on the double negative. We could have a geopolitical event, we could have legacy breaking us down, we could have tariff news, other headline risk. There's plenty of stuff we could think about and make up. None of that is, to my eyes, in the charts at the moment. We could also have a random movement of 80,000 BTC on a holiday with low liquidity. That wasn't I don't think it got hacked. Let me rephrase. It didn't get hacked, and I don't think it's going to get sold, but we'll find out Monday. Either way, I believe the individual moving coins was an old Bitcoin talk guy who was mining a bunch back in the day. But as far as flows are concerned for the ETFs, we're looking good. We can have all sorts of paper Bitcoin theories. We can have all sorts of theories about anything you want. Ultimately, we need more buyers. How do we go higher? More buyers. How do we get more buyers? Through the ETFs, through the Bitcoin treasury companies. And that's it. That's all there is to it. If we have people buying in the ETFs for whatever reason, that is supportive of higher prices. Thus far, we've had record flows for any new product on the market in ETF world via IBIT. So clearly there is demand for something here that wasn't there before. Performance since the cycle low is interesting because it basically suggests we have maximum 100 to 150 days left. You can see how by this point in 2013, we had already peaked by quite a bit. Even in 2021, we basically effectively put in the high for the cycle at that point. I will tell you, the price does not look like how it looked in 2022 after it double topped. Not to me. You know, the next step, if this is a double top, would be a breakdown back below 90K. Until we get a breakdown below 90K, then it's fair to say game on. Bullish continuation until proven otherwise. We have the 20-week moving average. We've got the cloud, and we're above both those things. So it doesn't make sense to me to be bearish at all-time highs here. I love that people are bearish at all-time highs. I love that sentiment is climbing the wall of worry. I love that people are thinking, just one more pullback, and I can get in. Which, hey, that may be the case. But when we look at the chart in a second, looks very strong to me. So we have a little bit of time left. September, October, November, whatever. Like, we'll see it, I think, plenty in advance. Also, on the seasonality piece, there's people who are upset that we'd go higher in Q3, or they're under the assumption that we can't go higher in Q3. I think July can be, we can hit 150 in July and then pull back to 100 by September. Like, it could be that violent. Totally possible, but that's a September, August problem, not a July problem. We got plenty of time in July. Flipping through the rest of these, Mayer multiple. We're just looking to overbought, oversold. That's it. Where are we relative to where we've seen historically? If we were at 231 today, I'd say, yeah, maybe be careful up here. We're not there yet. I think the cloud would also look a little different than it does today. We would be much more overbought than we were today. This is just based off the 200 daily moving average. Again, this looks nothing. This the price is the price for the day, but based on the moving averages, based on historical norms of overbought, oversold, we are neutral. And here's the power law, which is another way to look at that. Where are we in the power law? Are we screaming? Are we at the lows? No, we're neutral. We're at the midpoint. If this thing does take off, there are some very interesting prices up here. Whatever it is, I don't think we get 500 this cycle, but I think people have underestimated, they've been lulled to sleep a little bit on what could happen once this really takes off, price-wise, momentum-wise. Yes, it's going to take an insane amount of money to get us in that crazy parabolic advance. Life finds a way, is what I have to say to that. Is it possible? It's very possible. And I think you have to set yourself up for that possibility. Don't hope for it. Don't count on it. Just be there if it happens. That's that. 2-year moving average multiplier, again, overbought, oversold, we're neutral. Like, this is nothing. If we were at 327 today, I'd say, yeah, makes a little sense to take some off the table. Pi cycle top, the 5 people that like this indicator, has not crossed yet. So again, not calling out anything as far as end of cycle. We got close in early 2024, didn't cross, and now we're nowhere close to crossing here. MBRV, this is an on-chain signal. Market cap versus realized cap, again, neutral. 2 is nothing. 2.4 is nothing. Could this have diminishing returns? Absolutely. Will it? We'll find out. But we have plenty of room for higher. This just means how much unrealized profit is sitting on chain effectively. So it looks great, not overheated. We can even look at the long-term holder signal, same deal, not overheated. No big deal here, nothing to speak of. Pool multiple, how rich are the miners getting today versus the past year? Sitting close to the middle. So nothing, right? Like, again, why am I talking about any of these charts? Lining them up historically, they tend to top out when the cycle tops out. So we haven't seen that on any of these charts just yet. Funding is cooler than the other side of the pillow here, has been for quite some time. BTC, ETH, Sol, Ripple, Doge, like you can go down the list here. There really hasn't been much of anything, even in the past month, that has turned up. We've got Ape that got a little hot, Hype that got a little hot, but generally here, nothing getting in the red, nothing getting orange. And it's been like this for basically the whole year. We really haven't seen too much of anything. We've seen an orderly move higher, an orderly recovery for BTC, and the rest of this stuff is kind of just limped along here at 40 to 60% declines. Funding is still flat to negative. It's been rising. No big deal. Again, where's it today versus where we've seen even in the past year? It gets stupid. Stupid as in people are paying way too much to be long. This is the late longer crowd. This is the crowded trade to the long side. We're not seeing that here. Looks fine. We can look at this on the CME as well. It looks a little different. We're looking at the 1 week versus the 2 week. I believe here is 1 versus 2. We have seen a rise in funding continuously since 2023. This could be institutional type style bidding. I don't have a great read on what this is, but it is sustained and it is not spiking here yet. Unlike end of 2024 post-election when it just spiked like crazy. You can see these spikes here in 21 and 2022, not what we're seeing here. And why do we care at the end of the day? Like, because they're printing money. This goes up because they're printing money. That's the ultimate fuel. BTC is a great liquidity sponge. Liquidity continues to push all-time highs. Gold is another such liquidity sponge, as are stocks, global equities. So all of that should continue as long as liquidity continues higher. And it doesn't look like anybody is going to have any restraint at the printer globally. This is the dollar. Another reason why global liquidity is rising, continues to go lower, continues to hit lows. This could be a bull div. This could be a falling wedge. This could be a reversal. If there's another thing that could stop us here at this current level before breaking out, it would be a move higher on the dollar for whatever reason. I don't have a good reason why that would happen, but it's something to continue to watch. If we go back to, let's say, 100 on the dollar, or if we make a bottomy pattern here and have this edge to edge from 98 to 102 or something, then I'd be more concerned. But at 96, 97, who cares? Just let it die. Like, this is the worst start to the year for the dollar in a long, long time. And everything the US is doing policy-wise is fueling the dollar's decline. Play with the cards you're dealt, and that favors BTC. Looking at the alternative cloud first in the video. Maybe the first time ever. We're looking at the alternative cloud. This is AI backtested based on the BTC daily. We do have a bullish TK recross, price of cloud, bullish Kumo twist as of today. Now, I'm just as serious on the bullish side as I was bearish over here. Like, this says, be careful, you get a bearish TK cross, price below cloud. Bearish Kumo. That is a recipe for bearish reversal. Didn't see it. Hey, we might not see bullish continuation here, but we're living this a day at a time. And we've had not a lot of volatility in the grand scheme of things. What have you done for me lately? Chart is the question. Being bearish yesterday and bullish today makes sense based on what we're seeing, based on this pulling higher. We also have the COT data, which is not refreshed for last week's data because Friday was a holiday. We'll get updated COT data on Monday, but this still favors long continuation bullishness, despite what equities are showing, which is not as bullish. But if this comes out Monday and we get a new net high in commercials, it just becomes even harder to pull things down, just like liquidity going higher. It just becomes harder to pull this down as the lower the dollar goes and the better the signals get, right? It's this signal went from get out of your longs, be careful, get back in your longs. So we'll see what the COT data says. You, of course, have the cup and handle, inverted head and shoulders, whatever you want to call it. It measures to significantly higher. I don't think we're going to find 121 to be that big of a resistance despite being a yearly pivot, just because it's relatively close to price. So how this works pre-breakout is you position for that. At least that's what I do, not financial advice. If you're bullish here, then you should be positioned bullish. You shouldn't be in all cash. Maybe you have some stop limits ready to go. You certainly don't have very tight stop losses here, and you're probably not on leverage yet. maybe a little bit of leverage, but certainly spot positions heavily favored on the long side here based on what we're seeing. And then you just keep adding with the trailing stop loss. That's how I do it. You don't want to be in the position where you're watching this for 6 months, 8 months, and when this finally breaks on those 10 days a year, that you're just out of position, or you feel like you're undersized on your position. Stop losses for this would be effectively 100K. So keep that in mind with the leverage. But until this breaks, it is still an open question. We do have a declining volume profile, which is another thing you want to see with any chart pattern forever and always. We don't always see that, but here I think it looks pretty apparent. So that's not bearish to me either. Although some people have called that out. We're seeing, there's no volume here. There's no volatility. Well, this is what happens before a breakout. This is what happens before range expansion. You have this period of weeks and weeks and weeks of nothingness. So it looks really good. It looks really, really good. The scary part is I can't find anything that's bearish. That's what scares me. Here's the multi-year pitchfork, again, pointing to the potential of resistance sort of maxing out at 150. If I flashbang you real quick, we go back to the power law, what you'll notice here is we really have been unable to break the midpoint and hold above it. So if we go higher here for the back half of the year, this could be the moment where we get this parabolic exuberance. You could also argue because of the institutional orderly buying, we're never going to see that parabolic exuberance again. Possible, very possible. In any case, is any of this bullish? Sorry, is any of this bearish? No, it's not. It's all that looks good. And then that leads us down the road of, okay, let's talk about sizing. Let's talk about leverage. How far down the curve do we want to go? Miners have been sort of doing their own thing, going by the beat of their own drum, doing very well. That's obviously something you can look into. I'll talk about those more tomorrow. MSTR is another obvious example. Same story here. Chart pattern, pitchfork, above the cloud, making higher highs. This is what you want to see. This measures 550, 650, we'll call it. If it gets crazy like it did in Q4, well above 650. But all this stuff is pre-breakout, so use an intelligent stop loss. That's what I would do, and let it be. Let it do its thing. It might take another couple of weeks. It might push us into August. I don't think it will. I think we'll get an answer in July, but the last thing you want to do is get stopped out in the range and then have the range break higher on you, and you're, again, not in position. Doesn't make sense. So this is 2x BTC. If we go to 4x BTC, which is 2x MSTR, MSTU, same story. Starting to get bullishness here. Now, as we go up on the leverage and as we chart leveraged instruments, I do think you need to cheat this stuff a little bit, aka if you like MSTR a little bit here, if you like spot BTC a lot here, maybe you buy some MSTU. Maybe you bite the bullet, you eat the volatility drag a little bit, or maybe you buy some IBIT options, whatever it is that suits your fancy. But this chart in a vacuum looks excellent. And that brings us to the meme coins with Bonk, Mog, Pepe, all very similar. And you'll notice MSTU is basically the Mog chart. It looks very similar. Now, these all trade similar. And that just gives you an idea of the volatility profile of everything collectively, regardless of what happened with Bonk and Pump Fund, analogs, whatever, good for them, right? They did what they needed to do to get above the cloud. That's the most important thing. Certainly one of the strongest out of the gate before everything else is breaking up. I still like WIF. I still like Mog. I'd put Pepe in the mix as well. These four, maybe you like the Sol stuff better. Maybe you like the ETH stuff better. Either way, all these charts look great. If I had to pick 4 coins, like Hail Marys for the next 6 months, it's this. That's it. I don't need anything else. If you want maximum leverage, 4x BTC effectively, you're looking at it. So what are the targets? The targets are all all-time highs for everything. All-time high retest. WIF, that's 4. Mog, that's whatever this is in cents. Pepe, same deal, right? All this is pre-breakout minus Bonk. I would just use a trailing stop loss intelligently and let it be. Let it be for a couple months, especially if BTC breaks up. All these should eventually higher. Everything should eventually slowly rotate into some of the alts, especially as we get more of those ETFs potentially coming online. Looking at the BTC cloud, we do have a bearish TK cross with price above cloud, which is a long exit signal. Now, this is kind of unusual. You don't really see this. I was trying to think when I actually saw this. I don't have a great example in my head, but because of this range has been noisy enough to give you this cross because we've been flat for so long. If we do break up, you'll get a recross. I'm telling the cloud I know more than it does, and that's dangerous. I'm usually wrong, for the record, relative to disagreeing with the cloud. But if The cloud is right. The cloud wants 93. I'm still pretty confident that this breaks up. I don't know if there's necessarily anything here, even on the 6 hour or the 12 hour, but you could probably sort of argue there's something inverted head and shoulders-y with a neckline, basically where we're at. It's tough because there's no obvious level here. There's so many micro levels. So again, you just sort of have to cheat it. You have to bite the bullet. You have to say, okay, am I bullish? How bullish am I? Let's do it. Let's buy some leverage. Let's make sure I'm buying enough on spot. And my stop loss is whatever it is, 105 or less, depending on your size, leverage, etc. And you just let it do its thing. Let it do its thing. But it looks very good. A few of these others real quick. ETH, jokingly, I drew out this hellacious range that we may be drawing out, which looks to be semi-true, but ultimately the most important thing for ETH is it is above the cloud. It also has a bearish TK cross here. Price above cloud. Unusual. Just because it's been flat for so long. 2 months, 60 days. Still looks good though. I'd imagine this breaks up. I'd imagine Sol breaks up through the cloud there if BTC breaks up. And you can certainly justify an inverted head and shoulders on this puppy getting a multi-shouldered, right? Head and shoulders. It looks good. It's a mess, but in my mind, it's good enough based on what we're seeing for this range, which is a whole lot of nothing. And we're almost there. What would you want your Sol target to be? 300. What would you want your ETH target to be? At least 4,000. Like, what are we doing if we're not going to 4,000 on ETH? It's a fresh breakout. It's a fresh trend. We'll see what we get, but I wouldn't do anything drastic with the position until we get way up there. Ripple's another curious one because it too, similar to these meme coins, it has these times where it just runs. It has consolidated for a long time. It's got this descending volume profile as well. I don't have a great read on what this could be. Maybe it's a flag, maybe it's a pennant. Bullish continuation is the read there. Ultimately, if this can at this point close maybe about 245, you like it, and we can sort of draw this triangle in here and say, yeah, we're getting there. There's also a low time frame inverted head and shoulders here. So on the higher stuff, the higher market cap stuff, I think there's plenty to do. Anything that doesn't look like any of the meme coins I talked about, or ETH, or even Sol, that's close, it's just not worth it to me. It's way too far. You know, Curve is a great example. It's just way too far, right? Like, yeah, this could bounce. This could do really well. It's not where I like to buy it. It's just free floating below the cloud. And most of the meme coins, similar. They're just kind of doing their own thing. They're either flat or down, not pre-breakout. And lastly here, let's just check in on Sol ETH. And really, if you nail the BTC trade with size, with leverage, with whatever correctly, you know, we don't really need to talk about legacy, because legacy moves at legacy's pace, which is not crypto's pace. This is Sol ETH, low time frames, maybe trying. So if you like Sol over ETH here, you like the Sol memes or the ETH memes. If you're long Sol, maybe you hedge with some ETH memes instead of Sol memes. You're not longing your longs effectively, you know what I mean? But if there was ever a time to be full port anything, it would be now. It would be here. We are getting ready to potentially break out on BTC. Your mileage may vary. Viewer discretion is advised. Not financial advice. But we look very, very good by all accounts. So let's see what Monday brings. That's all I have for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.